Good morning, Sunday morning. The time 7:16 a.m. The date 11:17. What do we have before us here is a daily chart on EQIX. Now EQIX had a problem with its earnings. However, in this particular piece of the chart, we started this gap down over here, and that particular gap down was on 724. The trend, we were way up here at $206. This was an extreme bull that was extremely overbought that we had covered that was needed correction. Now, one thing I can say about this particular name is that we got down to lows. We got down to the lows where we put in that bottom 3 days ago at 152. It was on sale. It's had a daily sell signal for a number of days. That sell signal is starting to turn as it did over here. We had a gap up that will sell the gap in EQIX. However, fundamentally, they still remain a very strong company. The range of Friday's trading right here was exactly $8.88 intraday range, which is perfect when you're buying 1,000 shares or 100 shares or whatever the share count may be. Is now that we are testing all the major moving averages, the 10-day simple, the 40-day simple, and the 50. Most importantly is that the 100-day moving average is at 175. The 50-day moving average that is testing resistance is 170.2. The 168.2 is the 40-day. Now that the 10-day is flattened out, and the 20-day simple moving averages are going to be the key support levels when the stock pulls back to the 10-day at 160.43. The other main thing that we'll be doing is taking a look at these key resistance levels. What does that mean? It means that selling short into resistance and buying at support. We're going to be taking a look here in the options tree on a December regular contract is what the 160 call would look like, where that 160 call was, and how you can trade the options with EQIX. The call contracts, which don't show a lot, there's not a lot of volume on these. But let's take a look at where the lows were down in here, right around $4. They went up to $8.20 is that high there. Then from there, as we broke higher up in the chart, which I will be happy to show, we simply got to a point where that breakout of $8 has taken these calls to the high of $12.45. $13 was the open over here between 11 on 11.5s, and this is a 15-minute chart. We just wanted to see the highs. The actual volume had been increasing. We ended up 5.37 on the day, but the money flow, the positive money flow, was 64 million. They're buying. The option chart that we have here is a December regular monthly 160 call. The low again on this daily chart when we have those breakouts 3 days in a row. So here, when we're trading the equity itself, we want to make sure that you understand that that 3-day breakout right here was a major 3-day breakout on the call contracts. They were on sale down here when we were hitting the lows on the equity at 152. The 160 call up and out of the money had put a bottom in here, MMTs, and that bottom on this contract was $3.50. This high was $13.18. Now, having said that, we have a clear path that this call right now is inflated in price. It will have to pull back. So Basically what we'll be looking for when the stock pulls back to its support levels, as it slams into resistance levels, when we pull back and test that 20-day moving average, that is at 163.97. We would look at trying to pick up these calls down here at around $6.50. And this is a call chart at a given strike price based on when this thing pulls back here. This is a great trade. This is how to trade the options. This is where we start getting into the inflated area. Yes, they can continue to go higher a little bit, but you can't chase them. They needed to be bought down here. We're going to be looking at how to get into this call on pullbacks. That's the call contract. EQIX 160 December regular call. Based at major resistance levels, we're going to be buying the dips. As the MACD, which is a public indicator, we make our decisions using our own platform, but this is what the public looks at, and that's ascending. So as we continue to go higher and work off the sell signals here, that means that when you hit support, those support levels will be strong for an entry level. I will be happy to show where the all-time highs used to be, and we have traded this name for a long time. And for this calendar year, we were up here at $206. There was some extremely overbought in this area, and we started a reversal as we had covered it back in this time frame. Back in July, in August and July, we said we were overbought. It does like to rally off of certain bottom levels, and right where I drew this trend line, which was that bottom base, and then this ascending breakout from very deep oversold levels in that consolidation, we had a great rally from 165 back up here at a major resistance level where we hit the highs of 184. That was a $20 move during that time period in 2013. Then we hit another base. We gapped up. It was met with the sell, and then we put in the all-time low right here. One of the things that we like it, and let's be clear. Let's be clear about why support levels are going to be stronger than other periods and other time frames. Once again, bellwether EQIX, it was a bull for this year, it was a bull for last year, and it continues to be a bull as it turns to get back in its full bull capacity levels. So once again, as a recap to a weekly chart, which is also important to see, you will see here back in 2008, in the financial crisis, it's been a long-term hold. Institutions own it. We had the biggest breakout right here to the highs on this weekly level. We hit a weekly buy signal, and there's that all-time high at 206. Unfortunately, it got extremely overbought, and it had a few little challenges in its earnings. Now, let's just take a look at the weekly versus this is the weekly. The chart that you see here is that daily piece of that last downside move with the turn of the public indicators. We are now approaching major resistance levels in all of the key weekly moving averages at resistances, MMTs. Now remember, there's two sides to every trade. This hit the 10-week moving average at 167. The 20-week moving average is at 176. That's the red line. The 100-week moving average at 179. We are above that lower band. Let's dissect the weekly sell signal. When you get this oversold on a weekly level, which it did at 15.24% a week ago, we are starting to make that turn. One thing that we cover, a lot of overbought stocks that have to be shorted and go down and pull back. Well, this one has to be bought. And this is the key support levels. So on the weekly level, when I draw a trend line there, let's just be aware that the daily pullback, this is 5 days, it's a weekly, but that major resistance levels, as it's tested before back over here on 1020, during that week, we hit those major key weekly moving averages, and bam, we pulled back and made the lows. And now this stock is going to base, it's going to set up. If it was to fail, then we'll deal with that issue. But right now, it's a great possibility for intraday entry exits, understanding the weekly resistances, the daily resistances. Understand that at key resistance levels, we would also be looking at the put side of the EQIX when it fails. These are all short-term trades. I repeat, short-term.